And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to The Real Investment Show. That's right, it's Monday again. Here we go, back to another week. Of course, the big news over the weekend was the Chinese spy balloon, right? So this was floating across the country, and of course, China's just saying, hey, it was just a meteorological balloon. It blew off course. I mean, balloons can only go up or down. The wind does the rest of the work. So it blew off course. Of course, over the weekend, the U.S. Air Force used a $300,000 missile to shoot down a balloon. So pretty incredible, actually, over the weekend. We now have an official space ace. The pilot that shot the balloon down is the first pilot in history to shoot down an object near space. So, so an official space ace. Anyway, the big question, of course, is the market like a Chinese balloon? Because this has been something that's been quite fascinating ever since the beginning. Now, just last year, right? Everybody's convinced the market's going to crash. We're going to have a bear market, a recession, so forth and so on. And since the beginning of the year, the S&P is up over 7%. The NASDAQ is up over 14% for the year so far. So just a terrific loft of asset prices ever since the beginning of the year. A lot of this in the most speculative, beaten up companies, and not surprising, kind of coming out of that bear market of last year, that I should say a correction, because we had a correction last year, came out of that very nicely at the beginning of this year. Question is what's going to shoot it down? That's the big concern here, right? Jobs report on Friday, exceptionally strong, coming in 500,000 jobs, and that was just an amazing number. Unemployment fell to a near record low, lowest level of unemployment since 1969. So first thing economists come out and say is that, there's actually no sign of a recession anywhere in sight. Of course, the White House taking some victory laps on the jobs report. Now, the problem with the jobs report is it was all basically massive revisions. Every year we go back and revise data. January is subject to very, very large annual revisions. And so again, later this year, we're going to get some other revisions that go back to last year as well. So, this is all going to kind of work itself out. But nonetheless, very big jobs number on Friday. Here's the one thing about jobs numbers, or I should say the unemployment rate in particular. Very low unemployment. If you go take a look at the unemployment rate as a chart, you know, the interesting dichotomy right now is that a lot of the media and analysts are saying, well, there's no risk of a recession here when you have unemployment at such a low level. I mean, how could you have a recession? Certainly seems logical. Yet, if you go look at a chart of the unemployment rate, very low unemployment rates occur when? Right before a recession. Why? Because everything is as good as it can get. What else happens when you have very low unemployment? You have a tight labor market that raises operating costs for companies, or having to pay more in wages, more benefits, those type of things. And so this always typically precedes a slowdown in the economy. Of course, match that with the Fed hiking rates. And at the same time, you're looking at a slower economic environment later on this year, potentially. So again, very low unemployment rate, something to think about, not from the terms of it being exceptionally bullish. It's actually kind of a pre-recessionary indicator. Just kind of, I know it doesn't make sense. It seems like a conundrum. You know, how could you have very low unemployment be in a recession? But things are basically as good as they can get economically. Now, I know that's hard to believe considering, you know, a lot of the other data that's floating around. But we are seeing improvement. Manufacturing, the ISM Services Index last week jumped from contractionary territory to 55, right? A massive jump in services. Obviously, that led between that and the jobs report, that's led to upward revisions for expectations for GDP for quarter one, is also leading for more upward revisions in some of the other data. So again, you know, just there's some things that are going on here, certainly providing a boost to asset prices well into earnings season. Earnings have not been terrible. We still have a fairly decent beat rate. Not surprising, though, of course, as we've talked about before. You know, we lower the estimates until companies can beat the estimates, but earnings beats have been coming in about in line with history. Revenue, though, however, what happens at the top line has been a bit disappointing. But that's not really deterred much of the bulls here, who continue to kind of chase this market higher. And as we talked about before, there's a real interesting situation here of FOMO, which is the fear of missing out. You know, last year, markets really kind of struggled all year long, but every time that there was a hint that the Fed might be close to changing their direction in terms of interest rates, the market would take off running on this fear of missing out on the Fed pivot. Everybody's trying to catch the bottom, right? I want to be the guy that bought the bottom of the market, so I'm afraid of missing out when the Fed does actually pivot. I'm afraid of missing that. Well, that exceptionally low unemployment rate and tight labor market is not going to get the Fed to pivot anytime soon. In fact, markets started pricing in now 2 more rate hikes this year. So the Fed is still going to be hiking rates, tightening monetary policy, albeit at a slower pace. But again, that's something that is going to impact the economy later on this year. So it's very interesting that while the markets are running up right now, and of course investors chasing the markets here because of expecting the Fed to pivot and to pause and do all these other things, there's a lot of data here that suggests, and again, just the size of the move in and of itself, the market has already put in basically a year's worth of moves historically in 1 month. So normally the market grows at 6, 7, 8% a year. You're almost 8% now on the S&P since the beginning of the year. So pretty much just sell everything, go home for the year. You've got your return locked up for the year. Of course, you won't do that, but this is the way to kind of think about it. But markets have priced in a lot. Now, look, we're very deviated from the means. Now, good news is, of course, on Friday, the 50-day moving average did cross above the 200-day moving average. So now we have that official golden cross in place. That is also technically a bullish sign, but markets very deviated. Expect some weakness here today. Markets are looking to point down a little bit at the open, but I kind of expect some sloppy trade here over the next week or so as we try to work off some of this really kind of overbought condition. Also, our MACD signal, which has been a very good indicator to keep you kind of on the right side of the market, still remains on a buy signal, but is beginning to soften here. So that a little bit of weakness in the market. We're likely going to see that signal trigger, suggesting a little bit more weaker price action potentially over the next month or so. We'll let you know when we get there. But again, those are kind of some of the things that are working right now in the market. So again, just kind of pay attention to kind of what's going on. You know, the world is not coming to an end despite the headlines and some of the commentary. I must have gotten 500 emails over the weekend over a Jim Rickards interview that went out suggesting that the world was about to crash. That's not going to happen. But nonetheless, we have gone very far very quickly, so expect a bit of a pullback here. And try to keep your views a little bit balanced. If you go listen to, a really bearish interview, go listen to a kind of a bullish interview, keep your focus on the ball, right? The ball's what's happening in the market. I should say, keep your focus on the balloon right now, which is the market that is rising higher. Again, the question is that somebody will shoot it down eventually. Just don't know what it's going to be. But again here, good time to take a little bit of profit, raise a little bit of cash, kind of rebalance the risk in your portfolio. Never hurts to do that when you get this kind of extended from means. Just kind of pull back a little bit, let the market come back to you. That'll give you a better opportunity to put some money to work. So a couple of things real quick. Housekeeping newsletter is out on the website, realinvestmentadvice.com. Just go to realinvestmentadvice.com, click on the Insights tab, get our latest newsletter. Make sure you subscribe to that. Our daily commentary will be out this morning at 7:30. Make sure you're subscribed to that. We send it right to your email box. Quick read, market trading updates, etc. All in that daily market commentary. We keep you up to date on the markets and what's moving markets every single morning. And of course, subscribe to our Before the Bell channel. That's our 3 minutes on the markets. Comes out every morning at 7:30. Separate channel now though. So subscribe to that at the website, realinvestmentadvice.com. Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Is your partner cheating on you? Financial infidelity is a relationship buzzkill and a wealth destroyer. Just in time for Valentine's Day, our next Candid Coffee will address how to avoid financial infidelity. Saturday, February 11th with Richard Rosso and Danny Ratliff. Build trust, improve your money talk, and pillow talk. Register today at realinvestmentadvice.com. How to avoid financial infidelity. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So, over the weekend, my wife had to go and spend the afternoon with her aunt for her aunt's birthday. And I lucked out of this picnic trip because I had to write the newsletter this weekend. But so there's a bit of a backstory here. I'm going to tell you why I almost got in a wreck this weekend. Yeah, so bit of backstory is last summer, my wife and I wanted to get away for the weekend. We had a lot of stuff going on, got a little bit of stress going on. So we said we wanted to get away from the weekend. So we rented a beach house down in Galveston, just wanted to get away for a couple days, take the dogs, go down and relax. Well, whenever we go to do something, my wife always tends to rattle it off to her mom, who then invites the entire family, right? So, our quiet little getaway weekend just to de-stress was quickly interrupted by the fact that her entire family is now going to come down and join us, at the beach house in Galveston. So I complained to my wife about it. I was like, look, I said, this was supposed to be a weekend to kind of de-stress. And every time your brothers show up, it's always drama, right? It's always some form of drama. She is very mad at me, right? She was very mad at me. She was like, you just don't want to spend time with my family, and that whole story, right? It's not it at all. I just didn't want drama, and it's always drama. It's always drama. So I was like, fine, honey, whatever. So we went, and of course it was drama all weekend, and so, but being the good, doting husband, I shut up and didn't say anything about it from then on. And since then, we've had other family gatherings, and I've said nothing, right? And every single time, it's drama of some sort. And so this weekend, my wife has to see, it's my aunt's birthday, so we're going to go down to Burton, and we're going to have this birthday dinner and, lunch, and then I'll be back, later afternoon. And I'm like, sweet, day to myself. I don't say anything about anything. So I have to take her in the morning to go and get her car picked up. She was having some brake work redone on it. And she starts complaining about the fact that now her brothers are going to show up at this birthday luncheon. And all of a sudden, her aunt isn't even going to show up. Her aunt is somewhere else and isn't even going to be there. And she's like, I don't even know why I'm going. And, it's always just going to be drama when brothers show up. And I go, is this the point? And my wife stops me right there. And she says, and if you want to finish that sentence of saying, is this the time that you're right? Just be afraid you're going to sleep on the couch for the next 6 months. And of course, she went, and it was drama. So she will still not admit that I'm right, but again, part of being a man, right? Just
drama begets drama.
Exactly. But I was when she's telling me this whole drama, I'm laughing so hard. I'm crying, and I literally almost wrecked my truck while we were driving because I couldn't see. I was laughing so hard. Anyway, a little bit of vindication. It doesn't happen often in my household, but every now and then.
Red letter day.
Yes, exactly. Okay, look, few things to get into this morning. We talked about, some issues that are going on, and again, over the weekend, apparently there's a video of Jim Rickards running around, and everybody's panicking over this video because it's pretty much just doom and gloom forecast. The problem is Jim Rickards is, and I like Jim Rickards, great guy. He's just been bearish for 10 years. So, the point is that there's always a crisis coming, and yet it hasn't quite matured yet. So, as we've talked about before, one of the problems with bearish forecast is that you can stay out of the market for too long expecting a worst possible outcome, and the worst outcomes generally never happen. They're great for making headlines, they're great for getting videos and views and clicks and those type of things, but what you're looking for is for what is the market doing now and how's the market going to respond to these things. And what is normally the case historically is that, the worst outcomes generally don't happen because the economy adjusts for things as things proceed, and nothing just happens overnight. Now, there are things that can happen which can certainly derail economic activity, like, shutting down an economy artificially and just saying nobody can go to work. That creates very big economic pain very quickly. But given a normal economic environment where the economy is left alone to its own devices, the worst possible outcomes generally don't happen because the economy begins to adjust for whatever that is. And markets begin to price in for the worst possible outcomes. And so they go, well, that's what we think the worst is going to be. And they adjust for that. And so that's why betting on those outcomes typically work out not to be a good position to be in, and it'll wind up keeping you out of the markets for way too long, because then you get yourself caught in this psychological loop of this is the worst possible outcome. The markets rally. Well, now that the market's rallying, it's being stupid, so I'm not going to buy into this rally because the worst possible outcome is coming. Then the market keeps going. And then you say, well, maybe the worst possible outcome isn't going to happen, but the market's already run too far, so I can't buy it here. Then the market keeps going up, so forth and so on. And you keep making these excuses why you can't invest in the markets because it's overvalued, it's moved too far, whatever it is, you've missed the boat. And then you wind up just being out of the markets for way too long. And, Danny and I and Richard have talked about here before on the show is that, we meet with people all the time that have been out of the market since 2009. They've been sitting in cash. And yes, they avoided the 50% decline, but they missed the 400% advance. So which was worse? So, these are the things that we have to take into account as we invest in the markets. And look, I'm not saying that there's no risk in the markets, but that's investing. Investing is about risk. Investing is about managing risk. And if you don't take on the risk, you can't make money. There's always a risk, and there's always a risk of loss. Hopefully we win more than we lose, but there's always a risk. But the problem with betting on the worst possible outcomes is like telling your wife that you were right. You never heard those words, I told you so. Because those tend to have worst possible outcomes for you. So again, this is one of the things, and this is a challenge that we're going to have to work with, over the course of the next several months. There is things that are occurring in the markets that certainly don't make any sense. Again, the market's up, the Nasdaq's up over 14% for the year so far already. I mean, that's a huge gain. So we've had quite a bit of first order data coming in. Like again, ISM services up to 55, employment, 500,000 jobs. JOLTS data continues to be strong. The employment cost index is continuing to weaken. That's bringing down some of those inflationary pressures. That's supportive for businesses, for earnings. So there is a potential here if the S&P, for an example, kind of chops its way higher to around 4,300, then you're like, there's no way that's going to happen. Well, it doesn't get you back to where you were at the January 2022 peak, but it's a fairly big rally from the October lows. And again, this is where, as investors, we go, what do we do with this? How do I navigate this? And this is, why we talk so much about technicals on the show. No, we're not technical traders at all. We're fundamentals. We love to buy fundamentally good quality companies, and we like holding them for a really long time. But that also doesn't mean that we're just blindly riding the markets up and down either. We talk often about we took profits in this, we trimmed this back, we sold, we got stopped out of this position. Those things happen as part of portfolio management. But the trend is to try to hold positions that we like long term for years, as long as they're good, fundamentally sound companies. They don't always work right away, but the goal is that over time, the fundamentals will pay for themselves. And again, this is one of the harder challenges of the markets, but this is why an overlay of some basic technical analysis can help you kind of determine when the market is trending positively, when things are occurring, and then when things are also getting very overbought, as they are now. And so we're probably due for a bit of and I wrote in this past weekend's newsletter, probably due for a bit of a pullback here. Take some profits. When the market gets oversold, you can put those profits back to work. But that's just kind of the process of navigating markets and managing risk. So that certainly, though, flies into the face of a lot of these videos that are running around talking about, the end of the world is coming and everything's going to crash, and you need to be in cash and whatever. It's okay. You can choose that. Odds are it's going to be very frustrating. Because again, markets typically don't evolve into the worst possible outcomes. All right, quick break, come back. Got some other stuff to get into this morning. Don't go away.
It's rock and roll. 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 It's rock and roll.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Is your partner cheating on you? Financial infidelity is a relationship buzzkill and a wealth destroyer. Just in time for Valentine's Day, our next Candid Coffee will address how to avoid financial infidelity. Saturday, February 11th with Richard Rosso and Danny Ratliff. Build trust, improve your money talk, and pillow talk. Register today at realinvestmentadvice.com. How to avoid financial infidelity. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
So my daughter has friends. Her parents actually raise chickens. And so the family had to go out of town, and they asked my daughter to go over and just watch the house, check the dog, check the chickens. So the first day she goes over there, one of the chickens dies. Chickens die all the time for different reasons, but I didn't tell her that. I'm like, oh my God, you killed one of their chickens? She goes, I don't know what happened. I just walked in to check the chickens and the chicken died. And so she's in a panic for like 3 days while this family's gone. I'm just leaving this thing and run, right? You need to go over there and fess up that you're a chicken murderer.
The Real Investment Show podcast.
She's in tears. She's devastated. She goes over there and she's like, I have to tell you, I killed your chicken. And he goes, honey, they die all the time. It just happens. That's why there's so many of them out there. It's a numbers game.
The Real Investment Show podcast. Same show, your schedule.
She didn't speak to me for 3 weeks.
At realinvestmentadvice.com.
But I had a lot of fun with that one.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, Candid Coffee, and Lunch and Learn replays, plus each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for the Real Investment Show, or just click on the show links at realinvestmentadvice.com. Realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
Financial infidelity is a relationship buzzkill. Just in time for Valentine's Day, our next Candid Coffee will address how to avoid financial infidelity. Saturday, February 11th with Richard Rosso and Danny Ratliff. Build trust. Improve your money talk. Register today at realinvestmentadvice.com. Realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So it's 6:33. You know, they're talking a little bit about, worst possible outcomes. And this is, kind of in reference to, like I said, I just got a phenomenal amount of emails over the weekend. And I always know when there's some video running around because I just get a ton of emails with, kind of end of the world scenarios. And so I tracked this back down. I said, why am I getting all these emails? So I started kind of backtracking some of the emails and tracked back to a Jim Rickards video that came out over the weekend. And, it's gotten a lot of attention on the internet, and because it's very doom and gloom, right? And again, it's just, as I was saying in the last segment, those things tend not to occur. And it was kind of interesting because there's also been quite a bit of commentary going around lately about the housing crash, right? Housing has to crash, and this is, interest rates are up. I'll tell you, my wife and I are trying to buy a house. We're renting right now. We sold our house last July. We told you the story. And my wife and I have been out looking for houses. We put 3 bids on 3 houses, and we were outbid on every house. We're not going to get into a bidding war. This is every time we make an offer, it's our best and final. And then they always come back and go, we have another offer we're looking at, give me you need to come in with a higher offer. I'm like, nope, that's our offer. But we've been outbid 3 times. In fact, the house came on the market, just as a good example, listed on Friday, sold on Saturday. So so it's interesting. There are pockets where houses are sitting on the markets longer, but there are areas where there is no housing crash going on. So and the reason I tell you this is that, this is why you have to be careful with things. And, for instance, if you're looking for a house, as an example, like we are, it's very location specific. So yes, while we could have a national decline in housing prices, and while we could have a fall off in prices in areas like in California, specifically New York, Florida, some of the places where prices really got out of control. In areas where there is a limited amount of land, you can't build any new houses, those type of things, the areas that are landlocked for one reason or the other, there's no housing problem there, right? It's a supply demand game. And there is still just a crap load of cash floating around the markets. There is a lot of money that's out there because, these offers that are beating us out we're all cash and they're all cash. So, it's all cash offers competing on all cash offers. And because it's just the way the market is right now. But that's also going to cushion some of the end of the world type scenarios. And that's my point, is that you've got to be careful with these end of the world scenarios because those typically, as I said, don't tend to happen. However, now having said that, doesn't mean that the market can't pull back. What we have right now going on is quite interesting in the markets. And again, as I said earlier, the S&P's up 7.7% for the year. The Nasdaq's up 14.7% for the year already. Investors are chasing the markets in what is clearly a case of FOMO. And there's data that supports that. We had record call option volume on Friday. So we've written some articles that are on our website. If you go to realinvestmentadvice.com and in the search bar, type in the letter 0, DTE. It's 0 days to expiration. This is the new phenomenon that's going on in the markets where people are buying options with less than 1 day to maturity, which are creating all kinds of market volatility. But that's why you're seeing these days where the market's up 3% on these options expiration days. But the point is that you've got a clear case of investors that are now no longer focusing on fundamentals at all. It is simply the Fed's going to pause. I need to be in the markets because when the Fed pauses or potentially cuts rates, then markets always rally, and I don't want to miss the bottom. This is the fear of missing out on the bottom, as I said earlier. But, while the market's pricing in the end of rate hikes for the cycle, and should I dare say, trying to price in rate cuts at some point. Again, when the Fed's cutting rates, there's nothing good going on if they're cutting rates. They just don't cut rates because. But this idea has really fostered this big move in the markets, and corporate fundamentals really don't support the rally in the markets. Per FactSet data, I'm going to read this to you. 70% of S&P 500 companies have reported a positive EPS surprise for the fourth quarter. Now remember, we've cut earnings dramatically since June of last year. S&P 500 companies are beating EPS estimates by the fourth quarter by only 0.6% in aggregate, just shy of the 5-year average of 8.6. Fourth quarter earnings are tracking down about 5.3%. Yes, down. So earnings are declining by 5.3%, yet we're all afraid of missing the markets, and we're running markets up, which what does that translate to is the fact that you have a market that is running up on valuation expansion alone because earnings are declining. In fact, right now, CAPE trailing valuations are now back to 29 times earnings. That's not cheap by any measure. Last week, Apple's earnings, they really stunk. Stock was up 3%. Another bad quarter from Amazon, Google / Alphabet, whatever you want to call them, had a pretty lame quarter on the results of YouTube. Meta's quarter, stock had a huge advance. Stock was up 20% on Meta's, but their report was actually very poor quality. Earnings badly missed what the markets were expecting. The only thing that popped them was the deep cuts that they had taken to cut the expense guidance cuts that they had for 2023. The commentary from a lot of corporate executives are certainly not rah-rah either. Forward outlooks have been pretty dismal. Brian Moynihan, Bank of America, JP Morgan, Jamie Dimon, others talking about a recession this year. Banks stocking up for increasing loan loss reserves for a recession. Goldman Sachs. So it's interesting that despite the outlook for the markets, investors are running up prices anyway. And again, it's that fear of missing out, right? I don't want to miss the bottom. And so we've kind of run the markets up so much, again, technically very overbought. The underlying corporate fundamentals really don't support the run up in price, which suggests that, we're going to have another corrective phase at some point. Now, that doesn't mean that the markets are going to crash, but, we could have, 5% decline in the markets. We could wind up flat for the year at some point this year. That's what I'm saying, take some profits, take advantage of this rally, take a little bit of profit out of your investments and wait for the next opportunity to put that cash back to work. In the short term, beyond the FOMO and chasing momentum, it's hard to see fundamental reasons for stocks to keep pushing higher. Doesn't mean they can't. And that's the challenge that we've got to work through. But again, the reason I tell you this is I want to also offset that view that the world economically is about to end. The dollar is going to go to zero. The economy is going to crash. It's going to be, the last of us roaming around the streets, scrapping for food. It's not going to be that. Starbucks, by the way, just reported their 3 best retail sales days ever last week. So apparently people are not so strapped they can't afford $6 cups of latte. I may not eat, but I'm going to have my damn latte. That's all I'm saying. But that's the point. Separate out what's happening. This week we've got, another good kind of indicator. Chipotle Mexican Group is going to report earnings out today. Here's a company, by the way, that makes burritos that trades at 60 times earnings. Now, That's expensive. That's one expensive burrito. No matter how you want to cut that burrito, 60 times earnings is a lot for a restaurant, but they're going to report earnings this week. And look, this is, when you start talking about the retail consumer, burritos are it, baby. I mean, if you can go out and afford a burrito, then you must be doing okay. But, these are the things that, again, to kind of pay attention to, see what the market's telling you versus what a lot of these doom and gloom videos are telling you. We can't dismiss those entirely. Again, I'm not saying Jim Rickards is wrong. I'm just saying markets tend to price things in to occur. So, if something is going to happen, yes, the markets are going to correct, and we need to be aware of that. But we also don't want to be living in a bunker and we miss out on the opportunities to make money when we have those opportunities to do so. All right, we'll be right back. We're going to wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Is your partner cheating on you? Financial infidelity is a relationship buzzkill and a wealth destroyer. Just in time for Valentine's Day, our next Candid Coffee will address how to avoid financial infidelity. Saturday, February 11th with Richard Rosso and Danny Ratliff. Build trust, improve your money talk, and pillow talk. Register today at realinvestmentadvice.com. How to avoid financial infidelity. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
We've talked about before on the show. I remember when, Brent will remember this, when we were first started doing the radio show, I guess a couple of years ago over here. It was right when Beyond Meat was just really coming out, and there was this whole big push to, I shouldn't say it was longer than a couple of years ago. It was like 5 years ago. Yeah. There was a whole big push. Everybody was like, "Oh, we got to, everybody's going to stop eating meat, and everybody's going to eat Beyond Meat because it's going to be the new thing." And the stock surges, and everybody's piling into the stock to chase the stock higher. And we were on the show going, "This is ridiculous because this is never going to work out, right?" And again, there's just not that many vegans in the world. Again, if you take a look at statistics. There was an interesting poll out just recently by YouGov, and it just goes to show people's misperceptions about things because of the media, because of what happens on social media, what happens in the media, etc. And like, for instance, one of the polls asked a lot of different questions. They go, what do you think the percentage of these groups are in America, right? So African Americans. People thought they make up like 50% of the population. Reality is like 13. The transgender LGBTQ population, people thought that made up like 30% of the population. It's 2. So there's this perception that these very small minority groups, because we're bending over backwards to accommodate for a variety of things, religious and personal affiliations and all this, right? So we're making all these, changes in the world to accommodate these very small groups of people, and it's so public on the social media and media in general, that we just get this perception it must be a very large group of people. I mean, we wouldn't be going out of our way to do all this for such a very small group of people, but yet we are, right? And it's the same thing with this whole kind of vegan movement with Beyond Meat, is because, and this was what was interesting at the time, is that in order for Beyond Meat to be profitable at the valuations that they were projected, basically everybody in the U.S. would have to be vegan. And that's just not going to happen, because I can tell you one guy that's not going to. Look, I like a good veggie burger. I do. I tell you what, Beck's Prime has one here in Houston. Beck's Prime has probably one of the best veggie burgers I've ever had. Right? Really great. And I've had veggie burgers at a lot of other places too, because I do try to watch what I eat. So, I try to limit my red meat consumption to some degree. I eat a lot of chicken, a lot of fish. But I'm not giving up a good steak, because when my wife grills steak, that's my one night that I guaranteed there's no diet going on when my wife grills a good steak. By the way, Costco has the best steaks. But this was the problem. And then, of course, this really came to light when you went to the store during the pandemic. Remember the pandemic shutdown? And you went to the store and you couldn't find any food because all the shelves were bare. But the one shelves that always had a lot of food on it, Beyond Meat. Nobody wanted it. It's interesting. So a report out today by Axios. After years of hype, the tide is turning against the first generation of plant-based protein burgers. In a blow to vegans worldwide. Last year, both companies, this is both Beyond Meat and Impossible Foods, were riding high with prime placement on supermarket shelves, and Burger King even adding the Impossible Whopper to its menu. Impossible Meat even began to branch out, looking to expand offerings to highly processed meals such as chicken nuggets and sausages. Sales have since collapsed. However, which according to the recent Bloomberg report, has resulted in Impossible Foods planning to lay off around 20% of its workers. This is a quote from Bloomberg. Impossible Foods, Inc., the maker of meatless burgers and sausages, is preparing to cut 20% of its staff, according to a person familiar with the matter. Impossible Foods also offer voluntary separation packages. Beyond Meat's sales have fallen over 22% in the third quarter of 2022 alone. So you lost a fifth of your sales in one quarter. As the company is preparing to similarly cut 20% of its workers, the company has also lost several key executives. According to the report, supermarket sales are down 15% year over year, while orders in restaurants have dropped by 9%. And just recently, of course, there's been several restaurants that have now dropped those menu options off their menus because of lack of demand. And this was always the risk, right? So when Burger King was going to do the Impossible Whopper, sounded great, but it's all dependent upon sales. They can have this menu item, and if nobody wants it, they're going to take it off the menu. And so that's what's happening at a lot of these restaurants, where these sales, and again, in order to justify taking up a menu item space, and to stock that inventory and have that available, that costs money. And so if nobody's ordering it, that eats into profitability. So those items have to go at some point. And that's what we're seeing happen. But again, this is the problem with, there's nothing wrong. Morningstar, which is some of my wife's kind of favorite, and they make an excellent vegetarian sausage. They also make a really good black bean burger, etc. So if you want to add some vegan options to your diet, Morningstar makes some great stuff, right? You don't ever hear about it, but they make some great stuff. But again, it's not something that you can base your entire company around. Right? You've got to have other things. This has got to be a product line within within multiple other product lines that are making you a lot more of your profit margins, because these are just kind of low profit margin, low demand items. Nothing wrong with offering them, but it's really hard to justify a company. And Beyond Meat at the time, when they first IPO'd out, stock ran off to the moon. This was going to be, the next, dominant thing in the marketplace. This was going to be the game changer. And people were paying hundreds of times earnings and multiple times price to sales for a company whose sales would never mature to actually justify those valuations, because there just weren't that many people in the country that were going to be eating those options, and so or eating that product. You just couldn't sell enough of it to enough people. And this is when it comes to investing, these are always the things to remember. These companies that come out with a very specific product to a very specific niche group of people, it has limited upside. And so be careful what you pay for these companies. This is one of the arguments on Tesla for a long time, when the stock was just running up to the moon. The company would have to sell an electric car to every person on the planet. And we were saying back then, it was like, that's not possible. That's not going to happen, because other competitors are going to come into the markets and eat into that market share. So valuations, while they may not seem to matter in the short term, and look, if you're just trading a stock, right, and you buy an IPO of some company that's really hot and it's taken off, momentum will carry that stock for a while. Just trade it. It's fine. You can trade stocks like that are running a momentum. Just don't forget to sell them, right? Don't start taking a trading opportunity that's based on momentum and market hype and then try to build a unreliable fundamental argument for way overpaying for that investment, because that never works out well. Always, again, it's okay to speculate. Just understand what you're doing and make sure it remains a speculation and treat it accordingly. Measure your risk size, measure your bet size, how much position you take in it, and when you sell it. If you're buying a company for fundamentals, that's something that you can hold longer term, catch a dividend from while you're waiting for it to pay off. The fundamental support, long-term price appreciation over time may not go straight up, but it's going to gradually just kind of grind itself higher over time because of its fundamental growth trends, etc. Two very different ways of managing money, and doesn't mean you can't do both. Just make sure that you separate both for exactly what they are and understand the difference. And the problem for most investors is they forget. It's easy to buy stuff. They just forget to sell it. And that's the hard part. That's the tricky part of managing money longer term. All right. Get by the website, realinvestmentadvice.com. Our latest newsletter is out on the website. Make sure you subscribe. We email it to you every Saturday. Also, our daily market commentary will be out 7:30 this morning. If you subscribe to that, different email list, we'll email you that list as well. Every morning you'll get a daily market commentary. Quick read, about 3 minutes, gives you a little bit of a market update, a couple of interesting tidbits, tells you what's going on, earnings, economy, economic reports, etc., all coming out. Gives you a good little snapshot of the day. And of course, make sure you subscribe to our new Before the Bell channel. That's our 3 minutes on markets and money. It's now called Before the Bell. Comes out at 7:30 in the morning. And that's a little 3-minute video, gets you up to date on what's happening with the markets, where we're headed to next, overbought, oversold, what should be doing with your positioning. We talk about all that every single morning on Before the Bell. So it's all at the website, all different subscriptions. Subscribe to what you want. Don't subscribe to the other stuff you don't want. Doesn't matter. But it's all there for you. Subscribe to all of it. It's all free. Subscribe to all of it. We'll keep you up to date on you and your money. In the meantime, be sure and send me an email. And while you're at the website, if you've got a question, need help with something, always happy to do it. realinvestmentadvice.com. That's realinvestmentadvice.com. And we'll be back tomorrow, of course, for Tuesday. We'll see what the market does today. Looks to be opening a little bit weaker. Dow futures are down about 150 points. Been recovering a little bit this morning. S&P and NASDAQ also pointing lower after last week's pretty good rally. Again, markets overbought. Bit of a sell-off here. Not surprising at all. But we'll keep you up to date on it. Talk more about it tomorrow right here on the next edition of The Real Investment Show. Have a great day.